The ARK Investment Management team led by Catie Wood has been reinvesting in China's technology equities in recent weeks, despite Beijing's increasing crackdown on technology and education enterprises. ARK was one of a large number of investors that sold their Chinese assets after the governing Chinese party ordered security inspections of publicly traded internet firms such as Didi and prevented some education enterprises from becoming public or earning profits. Cathie Wood, on the other hand, saw enormous upside potential for the Chinese electric vehicle maker. What business had such huge potential that made her invest in Chinese stock despite crackdowns? What are her new holdings in the new stock? And what exactly makes her so optimistic about this specific EV maker? Stick around till the end to know the answer to those questions. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. You may have heard that Wood's business just sold some Tesla stock. However, this does not imply that she's becoming more pessimistic about the EV business. For instance, Tesla continues to be the most valuable investment at ARK Invest. Meanwhile, Wood has initiated a fresh investment in another electric vehicle stock, XPeng, a Chinese electric vehicle manufacturer located in Guangzhou that is also publicly traded in the United States. It went public in August 2020 at a price of $15, but because of the soaring interest in the EV stocks over the last year, the company's shares have risen to a price of over $40. That is what caught the attention of ARKQs, which is known for investing in autonomous technology and robotics, notably those that are disruptively innovative. For instance, Alphabet, JD.com, and Baidu are all included in this fund. Currently, this fund's net assets are $3.1 billion, and the newest participant in the drama is XPeng, the Chinese electric vehicle manufacturer. Cathie Wood's money management company purchased shares in the Chinese company on Thursday, December 2nd at a discount for the first time and sold further shares in Tesla. The mutual fund acquired 277,263 stock in XPeng, which was valued at an approximate $13.39 million. In November, the Chinese electric vehicle producer outperformed local competitors NIO and Li Auto. Every one of the three competitors sold upwards of 10,000 electric cars throughout the month, with XPeng gaining the upper hand with 15,613 automobiles delivered. It currently offers electric cars in Norway, but the manufacturer intends to expand worldwide next year, including a presence in the Scandinavian countries of Sweden, Denmark, and the Netherlands by 2022. ARK Invest already holds stock in Elon Musk's Tesla, so this will be the corporation's second investment in a pure-play electric car startup with its recent acquisition in XPeng. On the day after Wood's transaction, the markets rebounded strongly, with each of the main indices posting gains of more than 1%. ARK funds took advantage of the opportunity to rebound as well, although they ended the week still in the negative. The best performing stock in the group was ARKX, which gained 2.0% on the day, while the worst performing stock was ARKF, which gained only 0.1%. Cathie Wood's profits from the previous year are slowly eroding, but she may have something up her sleeve since she is continuously reshaping her ETFs to ensure that they're able to withstand market fluctuations. Moreover, when XPeng's stock price fell, which would have caused investors to be hesitant of purchasing the company's stock, Wood saw it as a chance to lock in yet another stake. And despite the fact that the stock of the electric car manufacturer has continued to tumble over the last week, Cathie continues to add her shares in the firm. The previous transaction in Chinese stock was followed by a purchase of an additional 97,697 shares in XPeng for a total estimated value of $4,340,000. When the investment fund reported its holding of XPeng ADRs on December 15th, it had 619,923 shares valued at about $27,570,000 or around 1.25% of the total position. It's now rated number 30 in ARKQ's holdings, up from its prior ranking of 34. It turns out that investing in disruptive innovation isn't the most secure investment strategy from the recent stock tide of the market. Several exchange-traded funds concentrating on these types of enterprises have generated enormous profits for her firm ARK Invest over the previous several years. However, when some of the high-flying stocks begin to slip into the correction area, the performance of the fund seems to be less pleasant. Her largest fund, the ARK Innovation ETF, has lost around a quarter of its value year to date, in contrast to the S&P 500 index that rose by 25% throughout the same period on average. Despite this, the well-known investor is sticking to her guns, doubling down on its research and modeling efforts. Wood said, "The opportunity in our strategy is huge right now. We expect a compound annual rate of return of roughly over 40% over the next 5 years." The issue on the minds of investors is why Wood is purchasing shares of firms whose stock has been dropping since the beginning of December. It's possible that the answer lies in her investing strategy. Wood often invests in stocks when she believes the stock has long-term potential, and the recent XPeng performance figure in November may be the explanation for her recent investment of a large sum of money into the firm. XPeng is doing well, and the company's delivery growth rates are nothing short of spectacular. In November, the business distributed 44% more electric vehicles than NIO, and XPeng's delivery growth rate of 270% is unparalleled in the industry. New product introductions in the fiscal year 2022, as well as the company's ongoing development into foreign markets, particularly in Europe, point to the possibility of an even quicker delivery growth. The company's growth has been substantially undervalued as a result of the price decline, and the risk profile has been tilted to the upside as a result. XPeng isn't only smashing it in terms of delivery volume. Because of significant gains in the car margins, the financial results for the third quarter were equally spectacular for the EV startup. The vehicle margin has increased from 3.2% in the third quarter of the previous year to 13.6% in the most recent quarter. A new electric vehicle model is planned to be released next year, which will lead to even more advancements. Quarterly revenue in the third quarter of 2021 grew at an annual rate of 187.4%, reaching 5.72 billion Chinese yuan, which is the approximate of $898 million. The company has not yet achieved profitability, but it is anticipated to achieve profitability in fiscal year 24. Exciting long-term development opportunities exist for XPeng not just in China, but also in other foreign markets, according to analysts. As more and more people purchase zero-emission passenger cars, the EV sector as a whole reaps the advantages. There are, however, certain dangers involved. XPeng addressed this supply problem better than other EV companies, but supply difficulties might harm autonomous car production in the future. In the case of Wood's firm performance for the last several years, ARK Fund seems to have been the buzz of Wall Street, beating the index and establishing itself as a major player in the investment industry. Wood's rise to prominence has been likened to Warren Buffett and other investment titans. Numerous market participants are attempting to profit from the success of Wood's investment strategies. I'm curious to hear what you think of Wood's investing plan. Do you think she bought the dip because of it being undervalued, or is she legging for the long term based on the company's performance? Let us know what you think by leaving a comment down below. On the subject of buying and selling stock, Walter Offit recently sold a small portion of his Lucid holdings at $37.41. He's looking for a dip below $35, at which point he'll repurchase further LCID shares. However, if the stock decides to rise to $60, that's a victory for him as well, since he owns part of the stock and would sell it at a higher price if the stock rose. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.